All right, guys. So I'm going to welcome everybody to session 2. So what we decided to name our group in Facebook was Traders in Training, right? And I put a little graphic on there today. It's very simple, right? But I think it's very fitting for what we're doing, right? There's no need to rush it or to be called anything other than what it is, right? We're Traders in Training. And so the goal of this whole thing is really to kind of break down some of the concepts that we all may be experiencing. That we all may be experiencing either as students already in IML or as people who are looking to get started in IML, give them the kiddie version of what they're getting ready to embark upon. All right. Now, I know we do have a couple people on that are not in IML right at this second. Hold on. Okay, sorry. So for those of you that are not currently members, like I said, this might be over your head a little bit, but you wanted to come, right? You wanted to come, so it's okay, right? The wealth code revealed is what this is about. So we want to reveal the wealth code to you, but at the same time, I want you to already understand what you're walking into. Okay, what you're walking into a skill set where some people have already been down some of the basics. All right. One more thing. Hold on. Okay. My son, he takes whatever he has on his iPad and he knows how to transfer it to my TV. So all of a sudden I hear these kids and these parents that was previously on the iPad, they're like in Dolby Digital sound on my television and they're talking, I'm talking, I can't. Okay. So these kids are too smart. So the iPad is over here and he's watching it over here. So anyway, so what we did in our previous session is we didn't trade, right? This wasn't about trading or anything like that. What it was about getting ready to trade. You have to prepare, right? You have to prepare. I'll give you an example of what I'm talking about. So I was on the phone with Oren today. He called because we were talking. He's like he wanted to get out and see what the hood of Atlanta looked like. I said, okay, go ahead, knock yourself out. So call me when you get back. So we kind of talked a little bit about that, but he was looking at a particular trade and at that time it was Euro USD, right? He said I'm waiting to get in this Euro USD. So I went to go Euro USD on my chart, and he's like, "Oh shoot, I missed the entry." Right? So I'm looking at it because I already had it marked up, and I saw exactly what he was talking about, right? Because the price had hit in the demand zone, and he was getting ready to get in for a buy. But he had missed it by a couple of hours. We were looking at the hourly chart, right? He had missed the entry by a couple of hours. And so he was like, shoot, right? So he was upset about this. And I said, well, he said, Tracy, we don't trade in the middle of the zone. I said, I know. I said, I'm looking at it. I said, okay, so the only thing that we can do at this point is it's either going to come back and go back into the zone one time, we can get in then, or we just got to wait, right? So he was royally upset about that because he was like, we're 2 hours too late. We missed the bag, right? But what is the point I'm trying to make to you? That we were on the phone and the premise was still the same. You do not trade in the middle of the zone. You understand what I'm saying? If you miss the entry point, do not just try to chase the trade. And I know so many of us have done that, me included, right? You hear a trade get called out, you go to your chart, you look at it, and they're saying it's going to be 30 pips or 50 pips, and you're looking at it's only 3 pips right now. And you're like, I'm going to get in the trade. Right? And it seems like every time you get in the trade in the middle, it goes the other direction, right? So we do not trade the middle, period. You're either trading in the zone, you're either trading at a support resistance line, or you're trading at a trend line. Everybody understand that? We're not trading in the middle. We are trading either from a demand or a supply zone. We are trading either off of a supply or either off of a support or resistance line, or we are trading off of a trend line. Okay. If the trade is in the middle, we sit on our hands and we wait for it to go where it needs to go. Okay. So we did the markup of our charts on on our last session. I'm really proud of what I've seen you guys put into the group as in terms of your trade, in terms of your charts and things of that sort. So I believe that you guys, at least most of you guys that posted them, you've got the gist of that, right? And it's an ongoing thing. You'll have to keep doing that over and over and over and over. What I want to do tonight, though, is I want to build on top of that, right? So now that we have the chart marked up, now we have to figure out, when do we think it's going to be a good idea to actually get in a trade, if it's a good idea to get in a trade. And so we'll go over some entry stuff. I had to take some notes for this because it can be kind of all over the place. So we're going to do some entry stuff. We're going to talk about swing highs and swing lows, okay, tonight. We'll talk a little bit about the Fibonacci, just when we're going to use it, why we're going to use it. And we're going to talk about retests. So I want to start this session off with this phrase, and this is the phrase that you are to live by. Everybody paying attention? Everybody listening? Here's the phrase. No retest, no entry. No retest, no entry. I'm going to say it one more time. No retest, no entry. So now what I'm going to do is I'm going to open up my chart. Hold on. Let me pull up a chart first. Okay, I've got one. Here we go. Let me share the screen. All right. Let me move this over. Hold on, guys. Got to make some adjustments on my screen so I can see you and this chart and everything else. Hold on. Okay. All right, there we go. So what I'm going to do is I'm going to go to Euro USD just because of what we were looking at earlier today, right? Just because we were looking at that a little bit earlier today. All right. So this is the daily, as you guys could see, right? That's the daily. And if I go down to the 1 hour, oops, come on, there we go. If I go down to the 1 hour, you guys see what I'm talking about right here? See this little point right there? That's what we were waiting on and we missed it, right? And so we started looking at it. We had already missed these first two candles. So we were around this third candle on the phone. And like, you do not trade in the middle of the zone. What's the middle of the zone? Where it is, right? That's the middle, essentially, right? Well, why is it the middle? Well, because if we're really looking at this, right, remember what our rules are, okay? We've got a demand zone down here. We got a supply zone up here. And we got support resistance in the middle. Hold on, let me put a line. So, I mean, we really could say, support is here, okay? And we could also say that we've got a little bit of action like right in there, right? Now, where it is right now, could be some action there, right? Could be a little bit of action there because we've got at least 2 points. Remember, you need at least 2 points before you can say anything as a support resistance. So 2 points is what? Here's an area, right? And here's an area where the price did not go below that line, right? So that's a line. And then here, what happened? Price went all the way up, but it did not close above that line, and it bounced back off and started to come down below the line, okay? So these would be some areas right here. So when Orrin and I were on the phone, we were like right in here at this point. And so the thing was, okay, well, it could potentially come back down, right? So I had a buy limit in, like if it comes back down to right around here, I'll get in. And if not, then I just won't worry about it, right? I won't worry about it until a later point in time. So the question then becomes, well, how do we know when to get in the trade, okay? Here's what we're gonna do. I'm gonna show this to you on the daily just because you can get a better idea and a better picture, okay? But here's what I want you to understand, that price will either hit or enter the zone or a zone, touch the zone, okay, 3 to 4 times before it breaks through. You understand what I'm saying? it will hit the zone 3 to 4 times before it breaks through. Okay, so what does that mean? Well, that means if we're looking at this large candle right here coming down, right? Or we can look at this large candle right here going up. Okay, thank you, baby. This large candle going up. The large candle came out of the zone, right? Then the question we always have to ask ourselves is, has price come back and touched or quote unquote retested that zone again? If price has not come back and touched that zone, it's what we call a fresh zone. It's a fresh zone, right? You go to the Domino's, you buy a pizza, you open up the box, and no one has taken a bite out of your pizza. That's called a fresh pizza, right? You don't want anybody biting your pizza. You have an apple and you go to the store, and you're searching for apples, and you make sure that nobody has bitten it out of any apples. You pick up an apple, there's no bite, there's no, chew out of it. It's a fresh apple. If the zone or the price has not come back and touched the zone, it's a fresh zone. Everybody understand that? Fresh. So what we're looking for is touches 1 and 2, right? Touches 1 and 2 give us confirmation that that's like a zone to even worry about. Okay, it's confirmation. Touch 1 and touch 2 are confirmations that this is like a zone. Okay, what that also means is that if you were going to get into a trade, you would have a better chance of profiting on your trade if you get in after the first touch or the second touch. Does everybody understand what I'm saying with that? Okay, and we'll point it out in just a second. So if it has not come back and touched the zone at all, we're not getting in, because the phrase is no retest, no entry. But price then turns around. It comes back down and it touches, hits, goes in the zone once. That means that now we're ready for a buy. Okay, so we would buy up to where? In this scenario right here, because we have a supply zone so close to the demand zone, we would buy up to the supply zone. Does everybody remember we talked about that? You buy up to the supply zone. Let's just say that there was no supply zone right here. Let's say this wasn't a big long candle. Let's just say it was just still coming down, 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 but this wasn't a supply zone. If this were not a supply zone, then the other safe bet would be you would buy up to the previous point of consolidation. You guys see this consolidation right here? So yes. if I'm gonna buy over here, I would buy up to the top of my consolidation. Now, do you guys see how that wick right here came up to that top of that consolidation? Right? So if I have a supply zone, I want to buy up to my supply zone. Okay? Because we want the safest bet. You guys understand? The safest bet. If it's not a supply zone and it's just, a trend, then you want to go up to, you got to look left, the previous level of consolidation, you want to go up to the top of that. Price, not wicks, price. Right? Because the top of the zone where that is going to more than likely be support resistance. You guys see? This line right here at the top of this, it's a resistance line. Price went up, came back down. Went up, came back down. Went up, came in. Look, all these wicks. And then it hit that last time and then boom, dropped all the way down. Y'all see? Okay? So rule of thumb is no retest, no entry. Okay? I need you guys to write this down and understand this because I'm going to quiz you in like 2 seconds. No retest, no entry. That's the rule of thumb. Then the next thing is price is going to come into the zone and touch it or retest it 3 to 4 times before breaking through. Touches 1 and 2 confirm your actual zone in the first place. And so if you want to get in a trade, your most high probable times to get in are on bounce 1 or bounce 2. When you get to bounce 3 is almost like a warning. It's like a warning. And bounce 4 could be completely the other direction or something. So usually on bounce 3, we're sitting on our hands to see what's going to happen. You guys understand what I'm saying? So what we're really looking for, if we're looking with fresh eyes, brand new people, let's say you don't want to worry about all of that. Here's what I'm going to suggest. I'm going to suggest that when we get done with tonight's session, all you're going to do is you're going to go and you're going to identify touches, bounces 1 and bounces 2, and circle the points of where you would have entered. Does that make sense? You need to start seeing it happen in the past so that you can build confidence in what we're saying. You can take my word for it, or you can actually go back and back test it and see, isn't that what happened? Right? And how often it happens on every chart, happens on every pair. It doesn't make a difference. That's the rule of thumb. Okay, so in Euro USD, can you guys see that it came down once right here, right? We broke out of the zone. That's what we looked for, our bullish, our strong bullish, our big bullish candle. It turned around and came down once. When it came down once, this would have been a great time to have a buy limit sitting right here at the top of this zone. You guys understand? So in other words, we were in real time, and you came back and you saw, oh my goodness, this big bullish candle was here, and you saw this red candle starting to form. It wasn't complete, but it was starting to form. You would come right here and you would put a buy limit at the top of this zone. This is the top of the zone. This is the bottom of the zone. Everybody see that? Top of the zone, bottom of the zone. You would put a buy limit at the price at the top of this zone. In this case, on my chart, it's 1.15993. I would put a buy limit right there and I would wait. If I have a fresh zone and price has not come back and tested it at all, I can come down here, put a buy limit at the top of the zone and wait for the first touch. You understand? That's it. Then if you miss the first touch, then you could, let's say you came and look at the chart and it was right here at this red candle. So you missed the first touch. Oh, well, you're not going to trade in the middle of the zone, are you? No, you're not. Okay. What you could do then is you could come down. You say, okay, well, it's got to come down a second point at some point. It's got to come down a second time at some point. If it doesn't, then oh, well. But if it does, what are you going to have sitting at the top of this zone? A buy limit waiting for that second retest. Everybody understand? You can set your trade up way before it even happens if you're trading supply and demand like this. Because you're waiting for first retest, second retest. Okay? So, Orn and I were on the phone today, right? We know that around in here is the second retest, don't we? Right? Don't we know that? We were just looking at the daily chart, right? So what do we, if you're going to be assessing Euro USD, you would be looking yesterday, right? Or day before yesterday, you can see this thing plowing down, right? And then you look left and you see, oh my goodness, look, it's only retested once. Well, that means it may, and it tried to right here, but it didn't. It came close, but didn't come into the zone. You guys see that? So you say, oh, okay, well, look, I'm going to wait for this second retest. This thing is plowing down. Could come in, put your buy limit, and wait. Now, had I been paying attention to Euro USD, I would have had a buy limit there. And when Oren called and said what he said, I'm like, oh, I'm in it. Because my buy limit would have been triggered, right? But I'm not really following Euro USD, right, at this moment, right? So it was fine. Does everybody understand what I'm saying? Okay, so what I'm going to do, I am going to stop sharing for just a second, and I want to open this up because I have to make sure from your voices that what I'm saying is crystal clear. Else, we can't move on. Okay? Whoever wants to go can go. It's fine.
I have a question.
Yes, sir.
Because you did it from the daily.
Yep.
And my confusion is going from the daily to down to the other time frames where I get lost. Okay. Like you just showed us everything on the daily. And my problem with the daily is the candles don't move until the end of the day.
Okay.
So, but then everybody trade from the lower time frame. So I'm lost in the sauce with that. Okay.
So let's go back. And that's fair. Okay. So Willie, you can at least see, at least from the daily, what we would be waiting on, right? If we were looking at this trade 2 days ago, we know that the pattern that's forming is it hit once, we're waiting for a second hit, right? That's all we're going to use the daily for at that point. Now on the hourly, we've got to now find those points, right? Hold on. So now on the hourly, Willie, doesn't this kind of look like and represent that big candle?
Yes.
Right? This is the same movement, except it's in a lot of little candles because it's hourly candles, right? So we can see the same pattern. We're just zoomed in, right? Okay, great. So it came out. Willie, isn't this the first time it touched in here?
Yes.
Now on the daily, it was one big red candle, right? That pulled up. It was a long wick. Remember? It was a long red wick. Okay. On the hourly, we would use the hourly to figure out when we're going to get in though. Exactly. So if we're watching the hourly, Willie, we can see this thing coming down into this zone here. Don't we see that?
Yeah.
Okay. If you miss it there, Willie, you can do it the next hour, can't you?
Yeah.
If you miss it there, Willie, you can do it the next hour, can't you?
Until it starts showing you that it's about to reverse.
Correct. So the whole point is when you see this, you can put your buy limit right here. And then you just got to wait. You might trigger, like it might have triggered your buy limit right here, but still, you see how it went down a little bit still? Hold on. See how it's still the wick right here went down below the zone? Yes. And then on this candle, it went down here, didn't it?
Yes.
So you might be negative for a little bit, Willie, because it's still playing around. The point that I'm trying to make is you get in at the top of this zone. So all of these candles are making up that big red candle that looked like it was pulling up. So all I need to, the daily to do is to show me the pattern. Now that I can see the pattern, I know what I'm looking for. I'm looking for touch number 1, right? So I missed touch number 1 in the hours, right? So I'm not going to sit and wait all the way till tomorrow. I can come in here and look at 11 o'clock and 12 o'clock and 1 o'clock and 2 o'clock to see if it's starting to make its move because I know touch 2 should be coming at some point, right? So I'm going to sit and I'm going to wait. So as I get going, look what's happening here. Now we're getting down. And Willie, doesn't this thing start to make its move towards the zone again?
Yes.
So if I were going to get in, Willie, I could see this coming on the hourly chart, can I?
Yes, but we was just, see, this is where I get lost at because if you flip back to the daily, it's nothing going on.
Okay, so, Willie, repeat after me. Repeat after me. The daily.
Right, the daily.
Is just for.
It's just for.
Identifying the pattern.
Identifying the pattern.
That's it. Don't keep going to the daily to try to get in. We're not trying to get in. We don't care whether the candle is moving or not on the daily. All we care about is showing us the pattern.
So I get up, I look at my charts start off on the daily. After I have it marked up, whatever, I look at the charts. Wake up, oh, something happening. The trend is going, is on this move up, or has a big bullish candle. I go down to, now, after that, I don't even look at the daily no more. I go down to the 1 hour and try to catch that massive bullish movement.
To catch the entry point, exactly, because you're looking for your entry point is going to be at the top of the zone here or at the bottom of the zone here. That's it.
Because 24 hours, it's going to make up that one big bullish candle.
Correct.
All right, I'm good. That's good. That's eye-opening.
Yes.
But and I'm looking at the same day I'm in. Like if you go to the daily now, the candle is this little. So that's like. You can keep going.
So, okay, but so the candle is this little. So, I mean, so what are you saying that the candle's that little? What does that mean?
On the daily. We went to the, okay.
We're not doing that no more, Willie. We done with the daily.
Correct.
Are we done with the daily, Willie?
So, but the daily is the day that I'm in.
Doesn't matter. It's just a snapshot of the day.
So I shouldn't even look at today's candle. I should look at the previous candle from the daily.
Correct. Yes. We're looking at the pattern. It doesn't matter exactly where the daily candle is at this moment. What we're looking for is to identify the overall pattern.
And then we make it up in hourly what's going on.
Exactly. So let's say that. Let's say you're going to go to college, Willie. Did you go to school? Did you go to college?
Yes.
Okay, so let's say you go to college. When you go to college and you at the beginning of the semester, what does the professor give you?
It's the syllabus thing.
The syllabus. Who cares about all we want is the big picture, right?
Right.
We're not looking at each exact day of the semester. He doesn't have it broken down for all 4 months of the semester in terms of daily. But what he's saying is maybe the first half of the semester, we're going to cover this. Or the first quarter, the second quarter, right? He's giving you chunks at a time. Now, what happens every single day? You don't look at that overall syllabus. Now you might have to look at something. You see what I'm saying?
Yeah, I got it.
So the daily is the syllabus, Willie. I don't care about all of that extra. I just need to see what the hell is going on overall for the semester. Okay? Now that I know what's supposed to happen or what has already happened in the world of trading, we look at what's already happened, right? So now that I know what's already happened, now it gives me an idea of what I should be expecting to happen, right? So now that I know for a fact what did happen, and I have an idea of what I believe should happen, I can now come down to my daily chart and identify the points in which I'm willing to execute based on the pattern that was shown to me in the daily.
Okay.
Are you with me, Willie?
Yes.
After you mark up the chart on the daily and you get the picture, get off the daily. We don't care.
Okay.
Let it go. Just let it soak in, will you? Don't hold on to that confusion. It's nothing to be.
Because a lot of people tell you to trade up the daily. Like as you learning and going through IML, you hear so many people, go up the daily. But then they show you charts on the 15-minute and the hour charts. So
that's exactly what we're saying. We're saying when you hear the educators say go off the daily, they mean go off the pattern that's on the daily. It's
going up, going down. Now go find out where to go.
You can't go. Hold on. Sorry, you got to turn that down and get that out your mouth, please. Hold on, guys.
I apologize, y'all. I got 10 days. My kids are gone, and I'm trying to get it right now.
That's all right, Willie. I'm glad you're asking the questions because I know what it's like to not see it. I do. So.
No, yeah, and I appreciate it. It's good. This is how we get the clarity, right? So here's the deal. You hear Stevenson say, go off the daily. You hear Luke say, or maybe Swing Masters, go off the daily, right? Or you might even hear Gustavo say, go off the daily. Why? Because of what I just showed you yesterday, or the other trading, is you have to draw the pattern on the daily. where that's what we're going off of. If you were to go down to the 15-minute chart and draw the pattern up, Willie, that pattern is so small because it's just a piece of the daily. So you're going to miss some stuff if you're only drawing your charts up on the 15-minute. So you want to draw it up on the daily so you can see what's happening over the last 7 months. Now that you see the overall pattern, then you can go down to the hour or go down to the 15-minute because that's where you enter the trade. So yeah, if a swipe trade comes out, it's usually going to show you a screenshot of a marking of the hour. Why? Because the marking of the hour is still within this white line. I drew this white line and this white line and this white line all on the daily, right? So I need to see price getting to my daily lines. I can't see that on a daily chart, right? Because it's only one candle, which is what you're saying. So we can't do it there. We have to come down and we have to see that one candle broken up into 24 candles. So if I see the chart or the candle broken up into 24 candles, I might be able to identify that at candle number 17, that's the candle I need to get in on. Right? But if I don't draw it up on the daily, I don't see this demand zone right here. Do you see what I'm saying? I don't see the demand zone at all because I didn't draw it up here. So I have to draw it there. Then I come here and I look for price to go to my daily markings. Now I'm going to get in on the daily demand zone because a daily demand zone means that I've got more pips to go right before a daily candle gets back to the supply zone, right? And vice versa, if we were doing it that way, supply down to demand. So does that make sense? Is it coming clear?
I'm thank you.
Are you good?
Yes, I'm good.
Okay.
Now everything else that we talked about in the beginning, I'm really ready to learn.
Okay, good. I understand the whole your kids being gone because look, when Josiah not here, I binge. I'm with you, okay?
I got an 11-month-old, a 5-year-old, and a 10-year-old.
You ain't got no rest in that house, Willie.
2 girls and a little boy.
Turn up city over there.
Oh, man.
Okay, so I'm with you. I'm not tripping or nothing. I just want you to understand that the daily is where it's our syllabus. We just got to see where we're going. Once I know that, I'm going to push that daily to the side and I can use that snapshot to come down to the hour or down to the 15 to start refining my entry points, right? That's all I'm trying to do. So look, let's just say this right here. Let me just do this really fast, okay? Okay, so this area right here is on the hourly chart, right? We know we could have got in at the bottom of this wick, right? Which would really been the top of our zone, okay? We can see that on the hourly. But during the hour, Willie, during the hour, we don't really know how far that's going, right? So what could we do? We could go down to the 15 now, couldn't we? Why? Because now those 2 candles are going to be broken up into what? 8 or 9 or 10 candles. So now when I see this thing coming down, right? I can see it coming down. Say, okay, I want it to come down some more. Willie, when this thing comes down and starts now going green, boom, I'll probably get in right around here, Willie. Right around there. Right? I'm probably going to get in right here at this wick potentially, right? But I got to wait till I start seeing it move. I might even wait, Willie. I might even wait until what? This big bullish on the 15-minute, right? Because the bullish on the 15-minute is not about a pattern. The bullish on the 15-minute is telling me the buyers are coming in now, right? So I might get in when this actually closes and retests, right? Right on this support line.
I mean, right there. Bullish on the 15. Okay, I got you.
All I'm doing is I'm just going down from a big candle. So if it's a daily candle, then if I go to the 4-hour candle, I know that I've got what, 4, 8, 12, 16, 20, 20. I got 6 4-hour candles in my 20-hour, in my daily candle, right?
Right.
If I wanted to know exactly where to get in, I got to go down to the 4-hour chart to start seeing those smaller breakdowns. And if that is a little, if I'm not comfortable with that, if I want to be a little bit more accurate, Willie, I will come down to the hour chart, because now I'm going to get 4 candles for every, I'll get 4 1-hour candles for every 1 4-hour candle, right? So if I can see a 4-hour candle going down, I want to see if that 4-hour candle going down is broken up into 4 1-hour candles going down, and if there's an opportunity for me to get in right at the shift, right? Because you want to get as many pips as you can.
Right.
So we want to pinpoint as best we can this area right here, right? We want to pinpoint, if we can pinpoint that candle right there, we want that, right? So let's just say, oh my goodness, when do I get it? Okay, Willie, let's go down to the 5-minute chart, right? Okay, so now look at this. So within that one candle, I now have all of these candles. So if I were gonna really pinpoint it down, Willie, I could get in dang right around in here. You see what I'm saying? I can't see that on the hour. We already established that. But I need the hour to let me know that this is probably going to be an entry area. This is an entry area because the daily tells me when it gets down here, this is a demand zone, and I need to start looking for it to ride back up. If I don't know that this is a demand zone, I don't know whether I should get in here or not, because I'm only on a 5-minute chart.
But isn't it further away from a demand zone right now?
It is, because I'm zoomed in. If I'm zoomed in all the way on the pores of your face seem further apart, don't they, Willie?
Yes.
The further out I come, I don't see the pores at all, do I, Willie? Okay, I mean, if I really got to a microscopic, I could see the cells on your skin, right?
Yes.
Okay, and you could see distance between the cells on your skin. You are correct. It does look further away, but that's because we're too far in. And that's why we're saying you can't trade zoomed in like this.
I can't. Where you going?
You don't know where you go. It's too close. You gotta bag up. Like you tell your kids, bag up off the TV. You too close, right? You're too close. Back up. You with me? So we back up to the daily. We see the whole situation. Then we zoom in for our entry point. That's what we're zooming in for, entry point.
Gotcha.
Okay? All right, so I'm going to stop sharing. Everybody get this. Because some of you guys might not have said it the way Willie's saying it, because y'all didn't want to say it, but Willie is not afraid to say this thing. So we are attacking this thing as best I can. I don't know how, Willie, I've tried my best. Okay, I hope it worked. Okay.
Right, so, Tracy.
Yes, sir.
So originally we started and we said we could put in a buy limit, but because it didn't go all the way down to that zone, then we had to kind of look for it.
Yeah, but that's probably because, hold on, if I'm honest with it, like this is why I'm saying practicing your zone drawing is important, right? Because hold on, let me share the screen, because it might look like that the way that I drew it. But my point that I'm trying to make is, let me come back out to the daily. It might look like that the way I drew it, or it might look like that, maybe let's say the way where did the demand zone go? Oh, there it is. The way that somebody else drew it. Right? Hold on. Oh, that's because we're so far over. Here we go, right here. Okay. All right. So like right here. So if I don't draw this 100% accurately, it might look like that, right? But the bottom line is that if I look at this retest right here and it came down into this zone. Now here's the key. The key is you want to get the top of the wick right before the bullish candle. Right. Okay. So so my thing was kind of off a little bit, right? Okay. So now, boom, we've got it, right? Now if I come back, my red candle is pretty much right there on it.
Right. But I'm saying, but when we went back down into the hour chart, I don't think it reached that point.
Okay, let me see.
So we stayed at the daily, we're good. But if we're going down to the smaller time frame, it looked like it didn't get to that point. And then you were showing that, you may have watched to get to find an entry. So
right, but here's the thing. Think of it in terms of the price. The price is the price, regardless of how you drew it up, right? Right. So if I know that this is going to be my buy limit at 1.6022, then that's my buy limit, 1.6022.
Right.
Okay. Now, if I come down here to the hourly, right?
Yes.
If I come down here to the hourly, it might not visually touch that, or it may touch that. It doesn't matter because my price is 1.6022.
Right. No, I get that part, but my point was it won't activate. I'd have to physically be there to do a market execution.
No, it will activate if you have it on set for that price. What I'm saying is sometimes your drawing might not be as accurate as the price itself.
Right.
Okay. So if you notice something like that, then you need to adjust your drawing. If you go in here and you set a buy limit for this point, it's going to activate when price gets to that point.
Okay.
Okay. You see, I kind of moved this and now it's here.
Right.
Okay.
So, do you have your visibility settings set so that way you don't see it when you're in a small time frame?
I don't know. Let me see. Maybe I have it set like that where they don't see it, huh?
Yeah, I think that's what they were talking about, why we couldn't see the zones. I think it's because since you drew it on the higher time frames, that's where it really matters. So you probably got the visibility settings for higher time frames. Okay,
so I don't have anything. I guess it's not showing on the 15 and the 5. I don't know. But here's what I usually do. Okay, here's what I usually do. And I never pay any attention to that really, Andre. But okay. For example, I can see it right here, right? For whatever reason, I can see it on the 1 hour. Okay, great. What I do is I come in, I'll get my horizontal ray, and I'll say, get me in right here.
Right.
Right? And I'll mark it up on here. Usually I make my entries yellow. Okay, and I make my take profits green, and I make my stop losses red. So boom. Okay, 16022 or 23. That's where I want to get in. I'll go on MT4. I'll do a buy limit for 16023. All right. Now, if I come down here to this, if I don't see the zone, it don't make a difference because I can still see where I put my entry point right there.
Right.
You see what I'm saying? That's why I was like, it don't really make a difference. As long as you mark off where you want to get in at,
right,
then it's going to still show that. Now, Tino has this whole thing with telling me about the zone. I don't know why. I'm not the like, I don't know. And I don't care. All I'm saying is if I'm at the daily or the 1 hour or the 4 hour and I choose a point to get in, I mark it there.
Right.
And then what I'm doing is I'm monitoring it down here. So if I've got this line right here, I might be looking at it and I might be looking at it like, oh, come on, Sally, come on. Yes. Right? Trigger. And now I'm in the trade and now I go and do what I got to do. Okay. So for everybody from that standpoint, the zone is so you can see it, but what I do is I actually put a ray where I'm getting in. Okay. I can see the ray. And so I'll put this here, right? And let's say this green line right here, right? This green line might be somewhere around here, right? I might even put this green line right here, right? Why would I put this green line right here? Why would this potentially be my take profit line right here?
Because at the top of previous consolidation.
Correct. Y'all see this consolidation right here on the daily? This is the top of it. And look at this green candle. Didn't that green candle basically hit that take profit? Right? I mean, if I move it over, right?
How do you know that that's consolidation when it's only
Because
two
you got,
with it only 2 candles?
Yeah, well, for one, I'm looking at it. I can see these markings I have right here. See this line I have right here, this resistance line. See this support line I got right here. If I look left, don't I see price bouncing up and down in that zone? Don't I already see that?
Yes, I didn't look far enough over. I was just looking at the first 2 candles.
Right? So you see what I'm saying? So I can see this is a consolidation area already. So then when I look back left and I see 1 candle, 2 candle, 3 candles, this is 4 days though. You got to remember that, right? Each of these candles, well, this is really like 1, 2, 2.5 days, right?
So you're on a 4-hour right now.
Oh, it's a 4 hour, sorry. So let's go to the daily. Go to the daily. So that's an example of what we're talking about, right? So now on the daily, I might not have been able to tell that was consolidation, right? So if I'm looking for an exit point, if I'm looking for a take profit, I have to come down. You guys understand? I have to come down. This is why I'm coming down. I'm at the daily just to get the overall picture. We got that, right, Willie? Now I can see where I'm supposed to get in on the daily, right? Everybody got that? Now I got to see where I got to get out, right? Now I don't know exactly where I'm going to get out. Now I said that essentially, if you're going to look at it on the daily, we could go to the previous level of consolidation or the previous level of resistance, and it would be here. Y'all see that? It would be here. Why? Because I've got 2 candles here, and I've got 2 candles here, and I've got these candles over here doing what they're doing, right? So this could be an area as well, right? Maybe even in here, right? Consolidation. But look how many, hold on. Look how many pips this is. Okay, let me just make it a different color so everybody can see what I'm talking about. Let's just make it magenta. Okay, there, the number of pips between my yellow line and there, it's 100 pips. So if you can wait in the trade long enough, you're gonna eventually get there. But let's say you don't wanna wait 2, 3, 4, 5 days, because that's how long it might take on a daily chart for the daily candles to get to that point. Y'all understand? You don't want to wait 4 or 5 days. So if I want a lower point so I can get in and get out faster, I have to go to a lower time frame. Y'all with me? So now I'm going to look and see, based on 4 hour, are there any points of consolidation on 4 hour? Yes, I see one right here. So now I might not get 100 pips, but what might I get? 58 pips, right? Because I'm not going as far. Could you still stay in the trade and go up to the magenta line? Yeah, you could if you wanted. But if you were cool with 58 pips and you had $1, you know, a mini lot size of $1 trade, and you got $58, you know, in a few hours, you might be cool with that. You understand what I'm saying? You cool with that? Yes. Okay. Hold on, guys. Let me take care of a little person for 2 seconds, and then I'll be right back. If y'all have any questions or any powwow, y'all can do that for a second. Give me a couple minutes.
All right. While we're waiting, what are the Tracy's probably going to quiz us on this. So what are the three points that we need to take in consideration when it comes to trading? I'll give the first one. First one is no retest, no entry. Can someone give me another clue as far as what Tracy shared with us?
I got one. Profit will come after the first or second touch. This is my first time on this, by the way, so I really don't know the terminology like that.
All right. Yeah, you're close. The first 1 or 2 touches basically confirms that you have a zone.
That you have a zone.
That's
okay.
what it's confirming that you have a zone, because basically it's testing the same area. So like, okay, we got our zone. So yeah, 1 to 2 touches confirms a zone. And then we have one more. Can someone else share what's the next tip on that?
The third one will be the warning. A third touch, a third retest would be the warning.
Yeah, yep. Third touch is the warning, and then yeah, that's it basically.
They say third test pretty much sit on the hands.
Sit on your hands to see what's going on, because basically the market will either break through a zone. The zone will break down after 3 or 4 touches. So it may break on a 3, it may break on a 4. So that's why you kind of wait. That's why it's good to get in, after the second, first or second touch, or retest. When she say touch, she's saying it means basically retest. So basically retest in the same area. Let us know, like, basically it's like a floor. That zone, if you're going for a buy, that zone below you is like a floor. You got a nice sturdy floor to bounce off of.
Okay.
Your goal is to hit the ceiling. That's why you don't get in the trade in the middle of the zone. It's like being in midair. You don't want to be in the midair when you get in the trade. You want to be either on the floor or you're coming off the ceiling.
Okay.
So that's why it's important to draw these zones, these areas of support and resistance, because basically that's what it is. We're just drawing a floor to bounce off of or a ceiling to drop off of.
Okay.
Yep. Let's see. Anybody have any questions, comments, feedback? Oh, she's back now.
All right. Thank you, Tino.
Mm-hmm. No problem.
All right. So y'all got what I'm saying, right? Now let's just say your goal might be 20 pips. Okay, you might not want to wait 4 hours. Okay, what you do? Come down to the hourly chart, right? Come down to the hourly chart. Well, that's pretty much the next level right there. You see what I'm saying? Like, you're not getting ready to get no more level. So that's the next level. I mean, I guess you could do it right here at this support line. At this resistance line. This could be a potential, right? That could be a potential take profit point too. And if that were a take profit point, then we're talking about 50 pips. So, okay, fine. But everybody understand what I'm saying? But you still see the magenta line is up here, right? So this is how if you follow in swap trade, you have a take profit 1, a take profit 2, and a take profit 3. Y'all see that? Like take profit 1 would be right here, the first one on like the hourly chart. But let's just say it kept going, right? Take profit 2, take profit 2 might be this area right in here, right? Where we were at before, right? And then take profit 3 would be the purple line. Y'all see that? That's how they come up with the take profit 1, 2, and 3. So it's up to you. If you want to wait, if you have confidence in this take profit 3 happening, then stay in it. But if you good with 50 pips, get in and get out. Get your bag and run. It's okay. You know what I'm saying? All right. Everybody got that part? We good. All right. So pop quiz. If a candle breaks out of the demand zone or breaks out of the supply zone, how many times is it going to potentially retest that area before a breakthrough?
So 3 or 4 times?
3 to 4 times. So the most opportune times to get in the trade would be at times what?
1 or 2.
First and second touch.
First and second touch, right? Those are your high probability trades, right? Now you can try to get on a 3, but sometimes the 3 blows through. Sometimes the 3 will pull you. It won't blow through, but what it'll do is for example, here, let me show you. Sometimes what a 3 would do, I think I can find one to show you actually. What a 3 would do is, let's just say this were a 3, right? It would come down, and let's say you're going to have a buy limit set right here, right? And your buy limit a trigger, and that thing will pull you all the way down here, right? And then come all the way back up. Now, if it does that, and this zone is 50 pips and you putting in a $2 trade because you geeked up and you just won't do the 0.01 like we're trying to teach you how to do. So you're going to put a $2 trade right here. You're down $100 waiting on this thing to turn around. Does that make sense? Stop. Go sit down. Leave my phone alone. No. Does that make sense?
Yes, but where do you put your stop loss at then?
Your stop loss is going to always be 3 to 5 points below the zone. Why? Because if this thing comes down here and wicks, then you want your stop loss 3 to 5 pips below the zone. Okay? So that's why your zones need to be drawn as, accurately as you doggone can get them. Y'all with me?
I got a question about the zone. I'm going back a little bit, but
About the what?
About the zones.
Okay.
So let's say you drawing a demand zone, and okay, you looking to draw your demand zone, and you see a large bullish candle.
Okay.
But right to the left of it is a large bearish candle. Do you not use that as support, as a demand zone?
Well, it depends. It depends. Well, here's usually what a demand zone is. A demand zone is usually identified by the large candle, but a candle, but consolidation right before the candle.
Okay.
Consolidation happens right before the candle. So if I were to come down here to this 4-hour time frame, right? And look, do you see consolidation right before this candle?
Yes.
Okay. That's how you really identify it. So if you're on the daily and you see what they call like railroad tracks, right? Where you got a bullish one. Hey, where's my cell phone? You got a bullish one and then you got a bearish one. Hey, what happened to my demand zone? It went away? What happened to it? Did I delete it? I didn't think I deleted it. I don't know what trading you're trying to do to me. But you see right here, so one of these little candles based on the daily really means that that's consolidation, because that means for a whole day, price was in that zone. You see that? A whole day, price didn't go above or below this candle because that's where price was. If you had a bit like this right here, if you had two big candles like this, that's not consolidation, right? Price is moving. So consolidation, so the rule is you want the big candle, but if you're not sure if that's a demand zone or a supply zone, go down to the 4-hour, and where you see your big candle come out, that's where you want to, oh, here it is. Maybe I was in the wrong area, I don't know. If you're not sure if that big candle is an actual demand zone candle, come down to the 4-hour and see what the candles before it were doing. If they were still bouncing around consolidation, then that's your confirmation. Okay?
Okay, I got it.
That's a good question. That's a really good question. So you always want consolidation before the breakout. You guys, we call this a breakout candle, right? You might hear people say a breakout candle. So why is it that you might hear people like Stevenson say, wait for the breakout? Wait for the breakout, because it's in consolidation right now, which means we're expecting a breakout. Whenever you have consolidation, we're expecting a breakout. You understand what I'm saying? It's like if you saw an accident happen on the highway, you're expecting an ambulance to come, right? It's just certain things that happen where you expect something else to happen after that. Right? If a team wins the championship, you expect them to do what? Celebrate. Right? So something happens, and then something else usually always happens right after that something happens. Right? Usually. Now, might you get a team in life that doesn't want to celebrate? Maybe. But on more opportunities than not, every time a team wins a championship, what happens? They celebrate after. So every time you start seeing consolidation, know that a breakout candle is coming. but you don't know when the breakout candle is coming, which is why you don't get into trades when it's in consolidation. That's why the rule of thumb is no retest, no entry. There's no breakout. There's nothing happening right here. Why would you get in on a buy or a sell? You don't know what it's going to do. You have to wait until the banks come in and tell you what they're going to do. This is demand. We're getting ready to buy this thing to the roof. So you let the banks come in, let them buy it up, let it exhaust a little, right? Because they didn't push price up, didn't they? They came and they pushed price all the way up. Do you buy at the top of the market? No. You wait until price comes down, and now Euro USD is on sale. Clearance. Back of the store. You ain't buying at the front of the store, you're buying at the back of the store. Clearance rack. So now when it comes down and it hits that zone once, boom, or you expect it to, right? We had the breakout. The team just won. We're expecting at least a first touch. That's why after you see the breakout and it closes, you can go ahead and put your buy limit right there because it's high probability on the first touch that you're going to buy up. You understand what I'm saying? It's like the highest probability. If it hasn't touched at all and you get yourself in on a first touch, you're going to get some pips. Okay, it's as almost as certain as my name is Tracy, you're going to get some pips on that first touch up or first touch down. Okay, you missed that first touch. Okay, it goes up, it does what it's going to do, and you're expecting a second touch. Go ahead, put that buy limit in. That's almost just as guaranteed, almost, right? Now, might you go up as high? No, you might not go up as high, but you're going to get some pips. You're going to get some pips on that second touch. Now, on a third touch, for example, you need to wait because that third touch could come all the way down and it could fail. It could fail, in other words. It could break through and come all the way down. So if it does that, I think it was Taisha or maybe in Shy, if you got a stop loss here at 3 to 5 pips below the zone, what happens is that this thing kicks you out the trade before it drags you all the way through the mud. Usually, as long as price is in this zone, you're okay. That's why your stop loss is outside the zone. Don't put your stop loss at the bottom of this zone. Don't put your stop loss in the middle of this zone. Put your stop loss 3 to 5 pips outside the zone because it can turn around inside the zone. And there's no point in you kicking yourself out the trade when it is potentially getting ready to go in your direction. The only time you need to be worried about getting yourself out the trade is if the price comes outside the zone 3 to 5 pips. That's how you secure that. Because if price come down that far, it's probably getting ready to reverse.
That helps. Tracy, I wanted to ask, since you said make sure that you draw your zones right, and we were just confirming the engulfing candle and making sure that it's consolidation right before. Mm-hmm. I want to know if you have seen it on USD JPY on a daily time frame, because I marked it up and I think I confused myself.
You marked one up.
The USD JPY chart, right? So
I'm here. Okay.
And so I had to go back to, it looks like January 2018, December 2017 for the actual zone, like how I found my zone. So thank you. Yeah, so like December 2017 or January.
Well, hold on. Here was a breakthrough right here.
Mm-hmm.
Hold on, but that wasn't necessarily, that was a breakthrough, but that wasn't a zone. Okay.
For the supply, for the top part.
Oh, okay.
The supply zone.
Okay, so you have supply, and you wanted to do what now?
So like you, I have 2 supply zones.
Yeah, that's fine.
And I just was like, well, right now with the current price action happening, I want to make sure I'm looking at the right zone. You know what I mean? To get the right sell limit eventually. And so there's this candle right here is.
Okay, so here's the thing. Okay, so you can see I've got this area right here, right?
Yes.
because that's the area we're all looking for, right? We're all hanging out because in consolidation, we're expecting a drop, but everybody's waiting for the breakout.
Right.
Okay. So the thing is, because, okay, so if the rule applies to each zone, right? 3 to 4 touches of each zone. Right. So if we're in this zone, then we need to go back and we need to see how many times have we already touched that zone.
Right.
Okay. From the time that we actually marked it up as a zone. So when did we first mark this thing up as a zone? Probably over here, right? We might have marked this up as a zone over here. This was the first the first bearish breakout candle, right? Over here. So then it came down, right? Well, hold on. Actually, this was the top of the zone. Okay, it came down, then we topped off, then we came down again. So another level. Okay, so boom, we came down. What happened? This was like a fake out, right? Why? Because really, this was still the first touch of this top zone.
Right.
So if you have a zone above the zone you're already in, you have to make sure you know what number touch we're on the zone atop you.
Right.
Because it could blow through. So like this blew through what looked like it should have been the first touch, but that's because the main first touch is up here. Okay, so fine. So we've got 1 touch at the top zone, right? 2 touches on the top zone. Then we drop down. Maybe 3 actually, because 3, here we go. Because I see this one right here, hold on.
Right.
So we've got 1 big touch and then we dropped. Then we have another touch right here, which is 2. We dropped. Then we have 3. And we came down and we never went back up.
Right.
Right? Okay. So now, if it comes back up to this zone, that would probably be 4. Which would mean that would be a breakthrough zone. Hold on. Right? That would mean it's a breakthrough, which is why we're sitting on our hands right now.
Yes.
Right? Because we think it's going to drop, but if it breaks out to the top first, we do better waiting for it to hit and see if it breaks through, because that's not going to be a drop if it goes up to that top zone, ideally, right? So we're on the 4th touch. We're on the fourth touch on the top zone. All right. So then this zone right here, it's not really nothing, right? This might be the first real supply of this zone right here, right? So now we drop out. And this is like a first touch to this zone.
Right.
So that's, hold on, baby, go. Stop. Monty hurt my leg. Monty did not hurt your leg.
Yes, he did.
How?
She hurt me when she ran off. She got on my bed again.
You got on your bed? Okay, well, get off your bed, Punky. Yeah. Okay, well, go sit down and watch TV.
I need something that could make Monty get off my bed.
Okay, leave her alone right now. So go sit down. Okay, so the fact that this is almost like touch 1 of this zone is what makes this so probable to be a drop.
Exactly. Yeah.
However, simultaneously, we got a supply zone above us. And if it goes up, then it could keep going dang on up. So that's why everybody's sitting and waiting. Every day, all the educators are like, sit on your hands. Sit on your hands, right? So your question is, what exactly? Do you have it drawn up where you have a two zones like this?
I do. Yep.
Okay. Yeah. And then that's it. Then you're fine. So you're not confusing. What you have drawn is not confused. You got to understand what you're seeing.
Right.
Your analysis of your drawing at this point.
Right.
Does everybody else see what we're talking about on UJ? Right? 3 to 4 touches a zone, it breaks through. Okay. So if we look, we can see that we first started this top zone right around here. Right? Boom. Drops down. 1 touch. Right? Then it comes up, drops down to the zone, this zone. 2 touches. Comes up, 3 touches, and we drop all the way down to the floor. Then we hit what? It's a double demand zone too. So we drop all the way through this demand zone because see, some people would have tried to buy right here, right? Because they don't look back far enough. They don't know this is a demand zone underneath them. So they're getting ready to buy right here and do what? Get trapped because the market pulls all the way back down, comes to this demand zone, and then it starts working itself all the way back up. It could potentially come down, close below this trend line and keep popping, or it can go up above here. And if it does that, then we're looking for a retest up there and for it to keep going. Everybody understand what I'm saying?
Yep. Thank you, thank you, thank you.
You're welcome.
I think what I have to do is put number 1, number 2, number 3.
Yep, that might help too. That might help so that as you get going, you don't have to keep going back and counting, right? You know where you are at all times. That's a good idea, actually. So guys, this is what we're saying. We're saying that because this would be a fourth touch to this zone, we're saying that price at its current point could either come up, bust through, because this is the fourth time, right? And if it busts through, we're not going to look for a buy. I mean, yeah, we're not going to look for a buy until it comes down and retests, right? And then after it comes out and retests, then we would buy right in this zone, right in here. Okay, y'all see that? We'll break through, retest, we'll buy up. Or what price could do, which is why we're waiting, is it could break down like this, right? It could, oops. It could come up. It could test that support. Oh, my arrow going the wrong way. Hold on. It could test that that trend line rather. Right? It could test that trend line. And then we can do what? Sell it down. Right? Sell it down to what initially? The first demand zone. If you're on the daily, right? Now there's other support resistance areas in there. You might not want to wait that whole time, right? But essentially, if you did wait that whole time, that's what? Dang, 280 pips.
Very exciting, I know. That's why I'm like, I gotta get it right.
Right? 280 pips. I mean, that's why if you just wait, it's gonna be good either way. Because we gotta wait for this thing to break out and retest. No retest, no entry. Y'all don't be trying to chase this trade as this big candle starts to form. That's why people get caught. No retest, no entry. The breakout candle is just your indication that the bank's getting ready to sell. They're like showing you their hand. That's it. You don't do it when they're doing it. You let them show you the hand first. You let price go back higher now because you want to sell at a high price, don't you? You want to sell high. So if they're discounting, and then buyers start coming in and pushing price back up, and that's the highest point, you want to start selling your shares at the top and ride it down 280 pips. Same way here. Or it can come up. They can say, oh, sorry, y'all, we're getting ready to buy this thing through the roof. US dollar is going to surge. US dollar is going to surge. If US dollar surges, boom, we're going to come down, we retest, now we're going to buy it up. So that's all we're waiting for is one of these two things to happen. That's it. Right? If you already got this stuff drawn, then you're good. Now, here's the thing. The rule applies to the trend line too, right? 3 to 4 touches, breakthrough. First touch, second touch are your best opportune times, right? So here's, if we keep doing with the analysis. So we got here, we broke through, and this is really our first touch of the trend line, right? So that's why this was a good buy. Boom, good buy, right? So now, if it comes through here, we have to assess everything else. If it comes through here, it could turn around and come up first, right? It could do that. Why? Because it would be a second touch, right? Which is why you don't want to get caught. So you want to wait. So if it comes here and price halts at this trend line and goes back up, you dang sure might want to get out at this support resistance line right here. Or you could try to wait through. I wouldn't. I would just get out right there. I would get out right there and then let price tell me what it's going to do at this point. It could potentially break through again at that point, or it could turn around, come plowing through, retest, and come back down. Why? Because this is a second point. So this is why if you don't have any analysis of what you're doing, yeah, you out here guessing. You guessing.
All right. So right now, I done seen a few, I think a swipe trade or something that came out with a UJ. Because you just said sit on your hands from the daily because nothing going on.
Mm-hmm.
I mean, I understand there's other little trades that happen between 5 and 15 minutes, but again, I know what's going on. I wake up, okay, I look at this. This is the red candle. Now I'm going down to 4 hours to see if I can get in the sell to the bottom of the supply zone.
Wait, say that again, Willie.
I said, right now you see where we on the daily.
Mm-hmm.
So if I wanted to get in the trade, like other people, like say a scalper or whatever, I would get in the trade to the bottom of this little supply zone if I wanted to, a sell.
Well, it depends. Let me go down to the hour chart and see. Right? Because my rules still apply. Right, remember with this?
If I was on a support and resistance line, would I be able to trade that?
Okay, like for example, if you were going to be on the hourly chart, then now the rules still apply, right? So what happens is this. We came and we broke through this supply zone, right? So we broke through and then we retested once, didn't we, Willie?
Yep.
Once we buy, right? Twice we buy. 3 times, right? It's not so much, right? 4 times we buy, but something weird is going on.
So now you know the sell. All right, that's thank you.
That makes sense?
Yeah, I got it.
Okay, so yeah, you could still trade at the lower time frame, but what helps you trade is the fact that you've got your chart drawn on the daily.
Right.
So now I see what the zone is. So now if I see price come in and break above a zone or this level, break into this zone or this support resistance, it breaks up above that, it comes down and it retests my line. I can still get in on a buy if I wanted to because the rules still apply. Right? And then if we look at that, you can say, okay, if you want to try to get you, boom, good 40 pips. All right. That's cool.
That's 80.
Right? That's cool. Okay. So even, hold on, what are you doing, Saya? So even if we're in this on the hourly, hold on, just hold on. Leave her alone. Okay, so here we still got to put some support resistance in though, right? Because we got a big open space right here, right? So if we were going to do anything, we would need to assess this little area. So first thing we need to do is start finding some support resistance areas, right? Boom, there's a line, right? There's an area, hit, bounce, hit, pull back, bounce, right? Broke through, right? You see that? All right. The next little area, hour chart, probably right in there, right? Next area, right in there. Right, Willie? You with me? You got to just keep breaking it down, breaking it down. Stop, Saya. Next level, right in there.
But it's good to do it just from the 4 hour, right? Like to me, in my head, I'm thinking, okay, I will have my daily support and resistance, then go down to my 4 hour support and resistance, different color, and then trade off the hour from there.
There you go. Exactly right. You could do that. Exactly right. Right. So now you see what? We had this candle come blowing through this level of support, right? So what did it do? It came down and hit it once, bounce back up. Hit it twice, it's pulling back up, right? So ideally, if somebody wanted to get into a buy, right? The ideal point would have been this area right here, 112690, right? Get into a buy and go up to where? The previous area of resistance, which is here, 112882.
30 pips.
Right? How much is that? 30 pips? There you go. You see what I'm saying? So that's how you can trade within it if you wanted to trade within it. But you do have some of the traders that's like, nah, I'm straight. I'm gonna wait for this 280 pips. Why though? Because they might put 50 standard lots on there, right? They waiting for that. They okay. They okay. They don't need this, right? We need this. We need 30 pips, 50 pips. We cool with that. They don't need none of that. They getting ready to put 50 standard lots, which is $500 per pip, on 280 pips. You understand what I'm saying? They're gonna be done for the year, Willie. Right? Everybody understand what kind of numbers we talking about? All right. Some of your master traders on iMail TV and swipe trades and stuff like that with that have like the larger accounts or whatever. They know what they're doing. Let's see. We got 50 standard lots, which is $500 a pip, times 281 pips. Guys, that's 140 grand. Do you see what I'm saying? So this not no game. Folks is waiting to see what UJ gonna do on purpose, because somebody yearly salary is getting ready to be made off this trade, right? So would you want to guess on 140 grand, or would you want to at least mark up the dang chart, see what time it is, and plan your course of action? Stop, baby. Right? That's what we're saying. That's why this skill can change your life if you know what's going on. All right? So I'm gonna stop you. Come back over.
Hey, so Tracy, yes, okay. So basically, the daily is basically our reference point, speak. And then, like you said on Facebook, you talked about the parameters. So basically, the same rule applies with every chart, with each chart that you look at, but set it up on the daily so you know which direction it's going, so you can kind of see it from a like Tino mentioned, you mentioned as well. It's like if you're up in a plane, zoom in on it, and then if you want to trade on a shorter time frame, go ahead and use the same rules, support resistance and things of that nature, so you can actually get in at the right times. Okay, I got you.
Correct. Because see, if I don't have this drawn up on the daily and I just come over here to the hourly, I don't know this is the supply zone that I'm trading in. You understand what I'm saying? So it's good to know this is an area where price is selling more than it's being bought. Now, could I possibly, so in other words, I might make more money on the sale opportunities in here than I would the buy opportunities in here. Why? Because it's higher likely that it's going to be selling in the supply zone than buying in the supply zone. It's a supply zone, regardless of what time zone we're on. Right? So yes, us drawing this up at least lets me know where in time I'm in. And now the rules still apply, but I can still see that the rules are applicable in a supply zone. So I need to be expecting a sale generally at some point, right? Or maybe a big sale. And that's all we're doing right now. That's why it's expecting a big sale. But also keeping in mind that we got a supply zone up here, right? So it potentially could go that way too. These are two big areas of selling off the US dollar, right? US dollar tanks in this area and it tanks in this area too. So we just got to see what area is going to tank from first.
Gotcha.
Okay. Any other questions? Y'all got it? We spent a lot more time on that than I wanted, but that's okay because I really wanted to get the swing high, swing low stuff, but I might wait on that. Okay? So what I want the exercise to be, okay, last time we drew charts. So y'all know how to draw charts. This time what I want you to do is I want you to draw your charts and I want you to go through multiple pairs and I want you to put a circle at entry points that would have made sense for you to get in. Okay, so if you're coming out of a supply zone, I want you to put a circle at point 1 and point 2 touches, retests, right? And show me that you would have sold in those areas. And if you would have sold, how many pips you would have got in each of those areas. Then you can also go to point 3, show us what happened at point 3, and then what happened at point 4. Okay, and if you're on demand, same thing. Find demand zone, show me the 2 most opportune points that you would have gotten in for the buy, and then talk to us a little bit about what happened on the 3rd touch and what happened on the 4th touch. Okay, go back. Just keep going back if you want, right? You can do any chart you want. I would say do at least 3 charts.
Is this from the daily?
Well, you got to draw it up on the daily first. The pattern is, yes, you can see the 1st touch and 2nd touch areas on the daily. If you want to do that, yes, you can definitely identify those on there. Okay. But if you're going back in time, it'll be easier. You can definitely do it on the daily from there, right? Because all we're looking for on the 1 hour is where we would have gotten in specifically. But the fact that we would have got in right there is still going to show itself on the daily because we're looking in the past, right? The only time it's really an issue because you're in the day, but we're not in the day last month. Those days have already gone, so you should be able to see your 1st hit, your 2nd hit, 3rd hit, and 4th hit very clearly. So you can show it on whatever chart you want. I prefer you show it on the daily because I really want everybody getting used to marking their charts, identifying what direction they're going in on the daily. Like if you were going to go from Chicago to Atlanta, you look at the whole map. You don't just look at your little radius of city that you're in. You look at the whole map and you draw what? Well, in the old days, I mean, they got MapQuest and GPS now, but when I was little, I remember my mom and my cousin were pulling out a map. Right? Remember the AAA map? You go to the gas station and get a map, and you got to pull over and put this big ass map out, and then you got to get your highlighter and draw your line down 75. Right? That's the daily chart, right? That's a map. I need to see from where would I stop. I would stop in Indianapolis, right? But exactly what exit, Willie? I can't see that from that map, right? I gotta probably wait till I get down into Indiana, right? Or go to an Indiana map now. And now Indiana map might have its state roads drawn out and I can see, oh, this is actually State Road 75, right? But on the big map of the United States, I don't know exactly what exit. I just know Indianapolis, I'm taking a break. You guys see what I'm saying? Right? So the daily chart, boom, where am I going to hit? I'm going to hit in Indianapolis. Where in Indianapolis? Let me go down to the hourly chart. Exit 37 is exactly where I'm going to get in. But I got to plan my route first. I know at this point in this area is where I need to put my buy in. If Willie said that's a good example, I'm going to have to use that example forever and ever and ever and ever.
That's a good example.
Okay.
Good analogy because that was it right there. I hadn't heard that. I'm like, oh, okay.
No, I didn't think about that first. We could have saved those 40 minutes earlier if I had thought about it. I'm sorry. Lisa said that example is fire. Okay, so that's the example we're going to all use. If you're trying to explain this to your team members, right? You're trying to explain this to people coming onto your groups or whatever, give them the map example, right? A map from point A to point B is a big map, but you're going to take a rest. You're going to take a rest where? I'm going to take a rest in Orlando. Where in Orlando? I don't know exactly where, so let me go get a map of Orlando because my U.S. map is too big to identify exactly what gas station and what pump, right? You want to get to the exact pump, you need to get on Siri, right? Siri give you the exact pump. And that's kind of where people go down to the 5-minute chart, right? Give me the exact, I want the exact speed bump, right? That price triggers and goes the other direction. I want to get as accurate as possible. Now, why you will hear the banks actually do trade, let's say, off the daily. Why? Because all of that swing and movement, like from this all of Indianapolis down into the exact gas pump at Citgo, their account can hold all of that. So if it did all of that, their account is perfectly fine. We can't hold all of that movement. So we want to get down into the exact points so we can get all the pips we can get. Okay? So on your charts, use the daily to mark it up. You're going back in time. You're back testing. So you should see all your first retest, second retest, third and fourth hits, if they hit or not. And start getting a feel for what you're looking for on the US map. Everybody understand? On the US map. If you know where you're supposed to take a rest at, then now all we got to do is go down to that local map and get our exact point. That's the easy part. What most people don't want to do is what we're doing, this stuff, because they just want to guess and get in because it looked like it's a big candle, which is, that's how they get you. The big candle is not where we enter. We enter on the retest. Okay? So everybody have the assignment, right? And you want to take your screenshots and put them in the group. Okay? And you put them in the group. We'll practice that. Now, once we get that done, today is Wednesday. Yep, there we get this done today. Then by Friday, we should be ready to, it's actually probably good we're doing it this way. By Friday, we'll be ready to do our swing high, swing low. So for example, you hear us say, when you first enter the trade, you enter at a what lot size, guys?
The lowest lot size.
0.01.
0.01. You get in at 0.01. Everybody, you get in at 0.01. Why? Because price could fluctuate and move around and do whatever. If price went 100 pips the opposite direction, your account only is drawn down $10. Everybody can still sleep at night if they lose $10. That starts to change if you add zeros to the $10, right? You start losing $100, $1,000, you have more stress. So we are not looking to risk any more than $10, everybody. So 0.01 on the first entry, okay? And this exercise that I gave you will help you identify what that first entry is. What we're gonna do on Friday is we're gonna identify the swing high and the swing low, because what that's gonna help us do is if we miss that first entry, right? So boom, price breaks through, comes down, hits the demand zone, one retest. We're supposed to get in, but we missed it, right? Somebody blowing their nose, I don't know what's going on. Okay, but we missed it. Well, we now want to identify the next point in time we can get in, right? It may not be the second retest because you never know how long it's going to be before the second retest, right? You don't know. You know that when there's a second retest, there's a high probability opportunity to buy. But if you don't know when the second retest is coming, as Willie said, what about all the trades in between there, right? Okay, well, in order for us to identify where we could get in if we miss that first retest, is we've got to look at the swing high and the swing low and where price comes back. In other words, the pullback, right? You get in at the pullback. So how do you identify a pullback? That's what we're going to talk about on Friday. Okay? Right now, let's focus on the most opportune time to get in. All right? And then on Friday, we're going to talk about the next most opportune time to get in if you miss that first opportune time to get in. And this would apply on first retouch, second retouch as well. Everybody with me? So this is why you need to know where you would get in initially. Then if you miss that, where you could get in again on the same trend before price potentially turned around and went the other direction or did whatever it's going to do. All right? Any questions, comments, concerns, feedback on this training tonight? Y'all good?
Feedback. This helps a lot. My head hurts just a tad, but it still helps a lot. Thank you, Tracy.
Well, you know, Oren does say get your Tylenol.
I know.
Dude, I got a question.
Yeah.
as far as it's like that's my first day ever trying to get accustomed to this trading thing.
Okay.
So as far as marking your zones, I guess your supply zones and stuff like that. How do you know when to like really do that? Like, cause I saw on your chart you had a zone where you had like a purple zone and then it was a gray zone or something like that, and I just didn't really understand exactly what that was.
Okay.
So I guess where the breakthroughs happen, like what are those zones? Like how do you? When I first enter a trade, is that stuff not going to be there already? Is that what
okay, so this is your first time doing this?
Yeah.
Okay, so so you're not in the Facebook group yet? Okay, so what I'm gonna do is I'm gonna make sure everybody here, because we do have some people like you that weren't here the other week. So what we're gonna do is I'm gonna give you the link. I'm gonna put the link to the Facebook group in the chat here, okay? So everybody who's not in the chat, feel free to get into the group, okay? And what I want you to do is, if Varad?
Yes, Varad.
What I want you to do is I want you to go back and I want you to watch the replay from the training that we just did on Monday.
Okay.
Because that video, that whole training was all about what you just asked.
All right, cool. I figured that.
Yeah, because this is step 2. That's step 1. So you go back, you watch step 1.
Yeah.
Now you were here live for step 2. All right. Okay. And so what I want you to do is I still want you to do the exercise that I gave the assignment in step 1, which was to draw up your chart like that. I want you to do that. And then I want you to do this once you get done with that.
Okay.
Okay. So you got a little bit of work to do, but.
Yeah, I do. But another question is how would I get to the chart? I don't even know how to.
Oh, the chart itself? Okay. Hold on, I'll show you that. Dang, bro, you just signed up what? An hour ago?
Nah, actually I didn't even sign up yet. That's the thing about it. I didn't even sign up for the what is it called?
iMarkets Live yet?
Yeah, and I didn't do it yet.
Not yet. Okay. All right, but who you gonna be? Who? Somebody invited you here tonight. I'm not gonna go into all of who, but somebody invited you here.
I mean, I saw you through Jasmine in California.
Okay.
She's a friend of mine, and so she actually said you're a mentor of hers, and she follows you and to look at your stuff.
Okay.
So
when you join, you're gonna be joining Jasmine.
I believe so.
Okay, good. That's fine. So yeah, you haven't even gotten it all going yet, but here, I'll show you what to do. Okay. So this chart, there's a website that's called tradingview.com.
Okay.
Okay, I put it in the chat.
All right.
Tradingview.com, and it's free. And when you get to tradingview.com, what you're gonna do is you're gonna create a little account. It's a free account, okay?
Okay.
And then what's gonna happen is, let me see. I don't even know how to go back to that. Hold on. Who knows how to go back to that main? You know when you go to that main screen on TradingView and you have to click on where it says charts.
Hit your T at the upper left corner, right there where it says 11, all the way to your left.
Left. Oh, here. There we go. Home. Oh, snap. Look at y'all. Y'all already know what's going on. Is it going?
What's funny while we kind of quiet is I marked up charts, but I didn't know how to analyze it. So after you gave us our first lesson and we went back to mark up charts, I had a lot of charts marked up that looked good, but I just didn't know what the hell was going on. So I'm sitting there like, well, damn, this was good. I actually knew what I was doing, but I didn't know. Thank you, Tracy.
Oh, you're welcome. You're welcome.
I don't know what. So if Varad, if you good, I go day 1, bro, you straight.
All right. No doubt.
So when you go to tradingview.com, it's going to bring you to a little site like this, right?
Okay.
So you're going to create yourself an account, and you're going to go right here where it says chart.
Okay.
And you're going to click on where it says chart. And when you click on that, it's just going to open up something, right? It's going to open up something. And up here, this is where you can put the pairs that you want to look at. Okay. So this is USD JPY. You got to use, the USD 3 digits and the JPY 3 digits, right? You got to learn how to put the pairs in, but that's how you get to the US dollar Japanese yen. Okay.
Okay.
That's, all right.
Okay. All right. I'm gonna do that.
Okay. Cool.
Do that.
All right. So we're good on that. We got Verizon squared away. Everybody has the link to the Facebook group, right? Everybody's in the Facebook group. All right. And so then what I'll do is I will take this recording once it's rendered. I will put it on YouTube and I will post the replay to this in the group as well. Okay. So Verizon, you're good. You can already go watch the first replay. Everybody else, you know what we're going to be doing already. You should need the replay right this second. If you do, you got to wait till later on tonight. Okay. And then I'll get it in the group and then that'll be there. Everybody good?
Yes.
Okay. So I'm going to go ahead and stop this recording.